Good afternoon, and thank you for joining us today. My name is Alina Islam, and I'm a mining analyst here at Red Cloud Securities. I'm very pleased to introduce Noram Lithium to you today, a lithium company advancing the Zeus Lithium Clay project in Nevada. For the webinar today, we have with us Greg McCunn, CEO. Greg will provide an introduction to the company, including an overview of activities currently underway at Zeus and catalysts that may lie ahead. After the presentation, we'll take your questions live. Please send us your questions via the chat box and we'll get through as many as we can. Before we get started though, I do need to mention the fine print. For Noram Lithium, there may be some forward-looking statements made on this webinar. I would direct listeners to the cautionary note on page 2 of the Noram Lithium corporate presentation located on the company's website. For Red Cloud Securities, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. We note that this webinar does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Noram Lithium specific disclosures. With that, I'll hand it over to you, Greg. Please take it away.
Oh, thank you very much for the introduction, Alina, and thank you, everyone. Good afternoon. Thank you for taking the time to hear an update on the Noram Lithium story, which is, as Alina mentioned, focused on advancing our Zeus Lithium Project, which is located in Nevada in the United States. And yes, I will make a few forward-looking statements during our presentation. Just thought I'd start by talking a little bit about the capital structure for those of you not familiar with the company. This slide was updated as of January 1st. Like most lithium companies, we've had a tough start to the year here where our stock price is down fairly substantially from January 1. So we were trading at about 37 cents a share with a market capitalization of about 33 million. These are Canadian dollars. To kick off the year over the last couple of weeks, that's eroded down to about 25 cents a share today. And look, it's a very difficult market, as most of you are aware. We'll talk about what the company's doing, but importantly, we are in a good financial position. Cash balance at the end of what was our third quarter ending October 31st was 6.1 million Canadian. As you'll see when we go through this presentation, in November and December, we were spending money drilling. So that cash balance, so this is unaudited and unofficial, but currently sits just a little over 4 million Canadian dollars. So we are in good shape despite a difficult market to continue to advance the project. And we'll talk about some key catalysts that are coming up for the company in 2024. Also, just importantly, it's on the slide, but I wanted to highlight management and insiders are significant shareholders here. We do hold about 12% of the equity. So interests are aligned certainly with the shareholders. So those of you not familiar with the Zeus project, it's located in the Clayton Valley in Nevada. The Clayton Valley is a very well-known lithium, I call it hotbed. We're immediately adjacent to Albemarle's Silver Peak mine, which is the United States' only operating lithium brine operation. Zeus is a sedimentary clay deposit. So if you like, the brines are located in the playa of the Clayton Valley, which is the floor of the valley, and Zeus located maybe about 100 meters in elevation higher in the sedimentary clays. Physically, the Clayton Valley is located near the nearest city is Tonopah. It's about halfway between the major cities of Las Vegas and Reno. So very easy access to the project site here. There's two distinct entryways into the project, both on paved roads with high voltage power line cutting actually right across the Zeus project site. So in terms of infrastructure, it is very well established with an operating mine, less than a kilometer away from the project site. In terms of development, the Zeus project is well advanced. About a year ago when I joined the company, I would have said that it's no longer an exploration project. The company had previously, through 6 phases of exploration, drilled off what you'll see here in a moment is a substantial clay-based lithium resource. And that resource was updated in January of 2023, about a year ago. But we are, as I mentioned, doing some drilling for other reasons other than expanding the resource, and I'll get into that and talk about some of those results as we go through the presentation here today. So first, just to touch on the resource base here, as I mentioned, this is a January 2023 update, so about 1 year old. Measured and indicated resources here. This was developed over 6 phases of exploration. Have over 1 billion tons of measured and indicated resources here, grading around 941 ppm lithium. So just to put that into perspective, if you wanted to look at it in terms of a contained lithium carbonate equivalent, or LCE, that's about 5.2 million tons of contained LCE in the measured and indicated category. And if you looked at that in conjunction with some of its peer deposit in terms of grades and contained LCE, this would be one of the larger, higher quality clay deposits certainly in North America. We did enter into, as I said, a phase 7 drilling program that we initiated in November 2023, so about 2 months ago. The purpose of that was not to expand on this. You can see here, if we were looking at any kind of meaningful production levels, let's call it 5 million tons a year of ore processing throughput, well over 150 years of mine life here based on the existing resource. So there wasn't a need to develop a further larger resource, but what we were trying to do with this drilling was to improve the quality of the resources. And in particular, we were testing for high-grade resources at a second layer below our first 6 phases of drilling, which was all done quite shallowly. We were also stepping out into some areas where we had some high-grade indications of high-grade ore, but we had not yet completed much drilling. That was both to the northwest and to the southeast. And as well, we've performed quite a bit of geological work in the second half of 2023 and developing what I consider to be a fairly robust geological model for the project, which hadn't been done previously. And some of this drilling, which has now been completed for phase 7, was targeted towards infill drilling to prove up that geological model. So we'll talk about some of the results that are coming out of that now in a subsequent slide. But first, just to touch on the project and where we were at the start of maybe a year ago and where we are today. If we rewind back a year, we had a resource estimate, but we didn't have a lot of engineering to go along with that. And so some of the key objectives that we undertook in 2023 to de-risk the project were, first and foremost, to focus the mine planning around the high-grade core. And so I think what you've seen in the previous slide is that we have a very large resource here. That's all great, but it's almost esoteric, it's so large. So we wanted to focus around developing a mine plan which would generate the best returns on our invested capital. And there certainly is a large high-grade core here at Zeus. Those of you who've been following the story will know that we did quite a bit of work with SRK during the year. We optimized a mine plan around that high-grade core, and it looks like we have about 40 years of mine life out of that 150 odd that we could have, that are able to feed grades into a processing plant about 50% higher than that 941 ppm resource grade. So averaging around 1500 ppm lithium. So of course, that's a tremendous improvement on the economics of the project. And of course, we'll be able to treat some of the more modest grades at the back end of the mine life. So that work was completed in the second and third quarter of 2023. As well, we were working hard on developing a flow sheet to be able to produce battery grade lithium carbonate from these sedimentary clays. And what we've decided as a company here, that our approach has been to stick to what we consider to be known technology. So that's acid leaching of these clay ores, followed by purification with limestone and lime. It's a very similar flow sheet to what's currently being constructed by Lithium Americas at Thacker Pass, which is further north in Nevada. That's, as you know, been funded by the Department of Energy and GM in recent financings for Lithium Americas. So that very similar flow sheet, we were able to take through the various stages of test work at a laboratory scale in 2023. We ran about a 7-month or 8-month campaign testing some higher grade ores as well as some standard levels of grade ores through these various process steps. And we were able to prove up recoveries, which averaged about 83% overall for lithium, which is quite good. And also to produce very close to battery grade lithium carbonate from the laboratory test work from Zeus ores. So all in all, we now have a fully functional metallurgical simulation with a mass and heat balance of the flow sheet, which just gives us quite a bit of flexibility for doing engineering and further developing the project. So we advanced the metallurgical understanding of the project quite substantially as well in 2023. And then finally, continuing de-risking the project, we have evaluated options for water supply. We do require water to be able to process these clays. And we are in the process of securing water rights from the adjacent valley, which is called the Alkali Springs Basin. Those water rights are right now in a protest period where the public comment period of 30 days, which I believe is due in about 2 weeks' time. We'll be able to address any comments that come up out of that and ideally have our water rights in place for the project that will allow us to continue with the engineering on the basis of securing water from about 10 kilometers away from the project site. Ideally, in 2023, we were going to wrap all of these into a pre-feasibility study. We decided that it was prudent for us to try and evaluate the resource and try and improve the quality of the resource ahead of that pre-feasibility study, which is why we initiated this 10-hole drill program that we talked about on the previous slide. And I'd now like to get into some discussion about the results from that. So what you're looking at here on this slide 7 is a map of the drill holes that were proposed as part of the phase 7 drill hole program, which started in November. I've got this slide was prepared just recently. You can see here where it says we were drilling one of the holes to the north. Each of those squares is a hole. There are 10 of them. We actually, as of this morning, I saw actually finished the 10th hole. So the drill program's now been concluded. We are still wrapping up core logging and sampling, but we're starting to see some of the results come through. So just to refresh the 3 purposes that we talked about here, we had 2 drill holes, which in this green circle, CVZ 82 and 83, which were step-out drill holes from the high-grade core, testing for high-grade mineralization to the northwest. We had a further step-out hole here, CVZ 84 to the southeast. And we had the high-grade core. We had infill drilling and as well as testing. Some of these holes are deeper below existing drilling, testing for a second layer of high-grade mineralization, which would obviously improve the economics of the project considerably. So all of these holes now complete with 2 holes now reporting in assays, CVZ 82 and 83. And I'm pleased to say that those step-out holes were quite successful. What we're seeing is wide bands of lithium mineralization at or above the resource grades starting from surface. So for example, CVZ 82 from 4 meters down to 52 meters of depth, we had 1108 ppm lithium over that 47.7 meter interval. And that's above resource grades of 941 ppm, typical of what we see in other areas of the deposit. And we'll look at a section in a minute. And within that, we had a layer of this high-grade banding that we've seen in other areas of the deposit, in particular the high-grade core, where we see between 5 and 10 meters thick of this more enriched lithium zone, which is averaging, in this case, about 1,454 ppm lithium. So again, about 50% higher than the average resource grades in the deposit. And in this case, we intercepted just under 6 meters of that mineralization. And similarly, in the adjacent hole 83, a wider intersection here, but again, starting from near surface, just under the surface gravel wash at a depth of 4 meters and proceeding down to almost 90 meters of depth, we intercepted again around that resource average grades of, in this case, 966 ppm lithium, and multiple bands of high grades between 1377 and 1471 ppm lithium, 5 to 6 meters of that in 2 or 3 intercepts throughout the hole. So this is a very good outcome. This was not previously in our resource model or in our mineral resource statement. So this will, in effect, extend the pit into this area. We did have 1 drill hole in there previously, but now backed it up with a lot more data and deeper holes, just confirming what we already knew and really proving our geological model. I think you can see that sort of the stratigraphy here has been idealized on this next slide, where we're talking about, this is again a geological model that was developed by Big Rock Exploration, who've been working with us now for about 4 months. It was based on surface mapping and their expertise in other lithium deposits, other sedimentary clay lithium deposits, and in part based on the Thacker Pass model. And what you'll see here is the enrichment appears to be occurring predominantly in what we consider to be these more black looking carbonaceous lake sediments that are lying underneath more oxidized tan olive clays and above greenish basal clays. So what you're looking at here is an idealized version of this. There is a scale here on depth scale. This is scale in this case is in feet. On the right hand side, this red bar graphs here are lithium histograms. So the longer the bar, the higher the grades of lithium. And if you can't read that, that's from about 0 to 2000 ppm, just to put it into context. So you can see here in the black clays, strong concentrations of lithium, as well as other elements like sulfur, moly, and arsenic. And interestingly, we don't show it here, but depletion of elements like potassium and sodium. And so what that's telling us is the source of the lithium was originally from these deeper, tough breccias. It was mobilized through geological events and concentrated into the black clays, effectively displacing sodium and potassium in the ilmenite and smectite clays, and concentrating in particular in this black clay layer. So this is an understanding that we didn't have previously, and seeing this prove up in our geological model is very valuable in terms of our understanding of the deposit and how we may mine it at some point in the future. Just looking at a cross section through the deposit here, again, what we're looking at here is the holes on the right-hand side, the left-hand side here of your screen. 82 and 83 are the two holes that we've just been looking at results of. Over to the left here, to the northwest, this would be the playa, where Albemarle's Silver Peak operation would be located. And you can see this large paymaster fault. To the left of that fault, or to the west of it, is the brine operations, which would where the brine would be contained in this area. To the right of that fault, we've got these tuffs, which were the source, these pink tuffs, which are the source of the mineralization. The red zone here is the more higher grade zones, the black clays, if you like. It's been modeled, outcropping here at surface and maybe even eroded in the middle. And you can see over here to the right-hand side or to the east, where we have more drill holes and some drill holes pending. That's more of the high-grade core of the deposit where we were previously focusing our efforts. And so about 2 kilometers to the east of these holes 82 and 83. So very interesting. We've got some now, as you saw in the previous slides, about 7 holes still to report here within this high-grade core, as well as this step-out hole, hole 84, which you can see has been drilled to the east of this Zeus fault, which we believe was the source of the lithium originally, which mineralized the clays here. So we're starting to develop a very strong understanding of the deposit. This is all very beneficial when it comes to engineering, and certainly at some point when it comes to mining these lithium clays. So all in all, so far so good. The first objective has been met. We have proven up high-grade resources to the northwest in our step-out holes, and certainly looking to anxiously getting hole 89 in. You can see we've drilled it much deeper here through what may be a second lens of high-grade mineralization. We'll start to see that as the holes for the results, for hole 89 come in. So where are we going next with this? I mentioned we've finished the 10-hole phase 7 drill program. We are starting to publish those assay results. Those first 2 holes were announced this morning, and you can expect over the course of the next month a steady string of assay results coming out. We'll group them into bunches to try and make them make sense for the market, but as we get them in, we'll certainly get them out and released. What we're going to do with these results is we will be updating the mineral resource estimate with not only the results from this drilling, but importantly with this new geological model. And this allows us to tie the high-grade mineralization together much better over the high-grade core of the deposit. It's a new understanding of the geology, and it will allow us to constrain the resource estimate to the geology as opposed to just to the grades in the model. We'll be updating the high-grade mine plan, which again I mentioned is we originally saw about 40 years of mineralization at around 1500 ppm. We'll be updating that and modifying it based on these the new understanding of where the high-grade mineralization exists, and of course any expansion to that high-grade mineralization. In parallel to that, very important for the project, I mentioned that we are working on getting our water rights sorted out, and we do have an application that's live currently with the Nevada State engineers in the Alkali Springs Basin, located about 6 miles or 10 kilometers from the project site. We're expecting news on the finalization of that over the coming weeks. So I believe that should be an important catalyst for the stock. And we're also working on our next phase of permitting for the project, which includes an environmental assessment, which will allow us to create a much larger disturbance than just drilling. And that'll be beneficial for feasibility study and eventually for full permitting for the project. It's called an exploration plan of operations, which we started working on back in October, and we're expecting to finalize here in the first half of 2024. So I think all of these are important catalysts for the stock. How we wrap this together and into an engineering study, and whether we update a PEA or whether we publish a pre-feasibility study as soon as possible, yet to be determined. We'll see how the results all shake out. But for now, these are the important catalysts that we have in front of us for the first half of this year. And as I mentioned, we are well financed to execute on all of these objectives for the first half of the year. So just maybe to conclude before we turn it over and answer any questions you might have, why invest in Noram? I think, interestingly, it's certainly a time in the market has been very challenging for us to attract investors, and I'm sure you as investors are looking at some of your holdings, wondering what's happening. I do believe the lithium carbonate prices have played a big role in what I see as a tremendous undervaluation of development stage assets in the lithium space right now. Currently, lithium carbonate is trading at around $13,500 a ton. A year ago, it was trading at over $50,000 a ton. So it's been a difficult year in 2023 for pricing. Although we're not making any lithium carbonate right now, we're certainly still affected by that in terms of the view of these projects from the market. We feel we've got a great project. It's a huge resource with a high quality, high grade core. We're strategically located in Nevada, where mining is welcome and permits are attainable in a reasonable amount of time. I think one of the interesting things about this project, and certainly on the clay projects, it's a very important differentiator between clay projects and pegmatite or spodumene projects. Clays produce a finished lithium carbonate battery grade product at the mine site in the United States. And I think that's something that pegmatites do not do. Pegmatites and spodumene produce a 6% at best lithium concentrate, which is shipped overseas to Asia, particularly China, to be refined into finished products. So clays do have that advantage in that they do have a finished product that's produced at site. As I mentioned, we're well financed to execute, and I think you can see here there's this little graph of our comparables on the right-hand side in terms of our enterprise value per ton of resource. We certainly, I believe, are due for a re-rate, a strong potential re-rating versus our Nevada sedimentary lithium peers. So, Lena, I think I'll finish there just to conclude and turn it over to you to ask, maybe moderate and happy to answer any questions that I can.
Thanks a lot, Greg. That was a great presentation. So we can get started on the Q&A to our audience. You can type your questions into the chat box at any time. So we've already got a few questions, Greg. First one, in today's news release, there's a new ore type, the reduced black claystone. Will this require modifications in processing?
Yeah, so just to clarify, no, it's not necessarily a new ore type. We certainly had identified black clays in our previous logging, and in fact, that was one of the only things that we really recorded when we were logging the core in the first 6 phases of exploration was the color of the clays as it came out of the ground. And we had a more greenish colors, a more tan color, and a more black color. I think we now have a better understanding of why the lithium is being concentrated in those clays. Certainly a better understanding from the mineralogy perspective and the geological perspective. Look, the process flow sheet that we proposed, I use the analogy, it's like using a sledgehammer to break a rock. It is very robust. It will leach pretty much any of these types of clays. There won't be any modifications that will be required. And certainly the removal of nuisance elements and impurities like molybdenum and arsenic is not a problem for the flow sheet. It's very robust in that sense.
Okay. So next question, it's on the water source. Has that been sorted? And then I guess the follow-up question would be likelihood of sourcing water from outside the basin.
Yeah, so as I mentioned in the presentation, we are in the process of applying for water rights. In fact, our application was launched. We went through the 4-week public notification period, and we've entered into now the 30-day public comment period. That is for water being sourced outside of the Clayton Valley Basin in the adjacent Alkali Springs Basin. Our project is located right in the northwest corner near the boundary of those two basins, so we're not far from a different water source. If anyone has been to the project site, may be familiar with that area. The Alkali Springs Basin also hosts an operating gold mine. Centerra is building a mine there near the town of Goldfields, as well as the town of Goldfields does source their water from that basin. But there were available water rights, and based on the state engineer's calculation, we are first in line and have applied for them. And we don't see any reason why we can't work our way through this process and secure those. Ultimately, we would love to come up with an arrangement where we could source water in conjunction with the Silver Peak mine. But right now, Albemarle, of course, has all of the water rights tied up in the Clayton Valley. And rightly so, because it's not really water, it's brine, and that brine is their resource, of course. So there's very low chance of securing any water rights in the Clayton Valley, other than through a commercial arrangement with Albemarle.
So on that note, any discussions with Albemarle?
Yeah, nothing that I could talk about on the call, Alina, but I think there is I can say that commercially there's a common sense rationale for combining a brine operation with a sedimentary clay deposit. The brine operations, as everyone would know, are busy trying to evaporate water using natural energy from the sun in large evaporation ponds. And as the water evaporates, the salts concentrate, and in several stages they're able to produce an impure salt that eventually is purified into its lithium products. That requires a tremendous amount of time, like measured in years, and it also requires a tremendous environmental footprint. So, we should theoretically be able to use reverse osmosis technology to recover some of the water from the brine and produce a more concentrated form that would shorten the time frame for evaporation required by a brine operation and allow the water to be, instead of evaporated into the air, used for leaching the clays. So there could be a win-win there, but I think our alternative solution right now will allow us to proceed in the meantime, and you never know where this might end commercially.
Okay, next questions. On hole 82 and 83, are these located in the same area as the ore waste piles?
Ore waste piles. So I think maybe a bit of a misnomer there, but maybe the waste piles. We certainly don't put ore in the waste, but we hope not anyway. We try not to. But in any case, we haven't I don't think published anything other than maybe an outdated PEA that was done many years ago that shouldn't be relied upon in terms of infrastructure design. Anything that was done prior to the January 2023 technical report, which updated our mineral resource estimate, should not be relied on. So any infrastructure that was seen in a previous old dated technical reports. There certainly is some high-grade mineralization in the northwest corner of the deposit. The best place, I believe, currently to put waste, which will be dry stacked, it'll be filtered leach residues. They would be in the southern part of the concessions, across the eastern side of the Zeus fault, where there's much deeper gravel overburden. And although there may be some deeper mineralization that would be off the east of that section that we showed you previously, it probably is not economic to mine. So that's a more natural place to stockpile waste material, and there's lots of real estate out there to be able to do that.
Okay, a question on Waratah's position. Have they sold their position?
I'm not aware of Waratah's current position. I think maybe that question should be directed to any filings that Waratah may have. My experience has been that Waratah, maybe I should just clarify the question for people who aren't familiar with who Waratah are. So Waratah are an associated group to the Lithium Royalty Company, the LRC, which is a publicly traded company listed in Toronto. They own and they invest in royalties in the lithium space. As a number of those royalty purchases also included an equity investment, and an investment in Zeus was one of the first investments that was made by the Lithium Royalty Company back in 2022, and it funded our current treasury. That's the money we raised in that sale of the royalty and equity raise is currently what we're spending. So there is a 1.5% gross royalty over sales from the Zeus project that is owned by the LRC. They also owned a 15% equity position. Is a little bit of a different business model. I think anyone who follows gold royalties will know that gold royalty companies like Franco-Nevada and Royal Gold, et cetera, tend not to own equities in small junior mining companies. I think now that the LRC is a publicly traded company, there's probably investor pressure on them to hold royalties and not equity investments. So we wouldn't expect them to be a long-term holder of our stock. We'd expect them to be interested in the project from the point of view of their royalty, which is actually quite valuable. 1.5% royalty on this project is worth, probably close to $100 million, even at depressed prices if this were an operation. So I'm not familiar with their current position. We know that Waratah also held some equity themselves. They did sell that in July, I believe. And there was a significant reduction in their position that was reported in September. Beyond that, you'd have to call the LRC and ask them.
Okay, just a question on the plan of operation. So once that application is complete, how long do you expect approval to take?
We're expecting to have the exploration plan of operations in place by early Q3. So that would allow us to do some more meaningful work, particular geotechnical pits. We'll be able to collect bulk samples and use those bulk samples for test work in the front end of the processing facility. That would be on a larger, more continuous scale, which would allow us to produce samples for material testing, like dry stacking of tailings, et cetera, which will support further engineering in the project. So realistically, there's not any test work left to prove up the flow sheet itself. The technology risk of the flow sheet has been, I think, proven and we're quite comfortable with. But the engineering risk certainly still exists, and there's a lot more engineering data required before we could say build this processing facility.
Last question here, Greg. Best estimate for completion of PFS?
Yeah, we haven't given any guidance on that right now. We have to, as I said in the presentation, we have to make a decision on whether we're going to proceed directly with a pre-feasibility study following the completion of an update of our mineral resource estimate, or whether we might go to an interim step of a preliminary economic assessment. So this is also, completion will be market dependent. So at this stage, we're not giving any guidance on when we might complete the PFS.
Okay, well, that's it for the Q&A portion of the webinar. Thanks a lot, Greg.
Thank you, Elena, and thanks to Red Cloud for hosting us. It's always a pleasure.
Just as a reminder for our audience, our next webinar will feature Sky Harbor Resources, and that's on Thursday, January 18th at 2 p.m. Eastern. Thanks for tuning in with us, everyone. Have a great day.